Welcome to The Explainer. Today, we're diving deep into Anand Rathi's latest earnings call. This isn't just any quarterly report. Fresh off a huge IPO, this company is making some big moves, and we're going to break it all down. The numbers, the strategy, and what it all means for their future.
Okay, so here's the game plan. We'll start by setting the scene, the market they're playing in. Then we'll get right into the hard numbers from their Q2 scorecard. From there, we're going to pop the hood and see what makes the revenue engine tick, figure out who their customer really is, and finally, unpack their pretty ambitious growth plan.
All right, let's kick things off with the big picture. To really get what's going on with Anand Rathi this quarter, you got to understand two massive things: the economic climate they're in, and this one huge event that basically just reset the entire board for them.
So this was a point the company really wanted to drive home. Think about it. While everyone else is dealing with economic uncertainty, they're pointing to the Indian market as this pocket of strength, this island of stability. And that resilience, that's pretty much the foundation for everything we're about to see.
And this part is absolutely key. The company didn't just walk into this quarter, they burst onto the scene. I mean, an IPO oversubscribed 22 times? That's just wild. It shows this incredible investor belief. But more importantly, it means they're now sitting on a war chest of nearly 750 crores, ready to pour straight into growth.
So you've got a strong market and a pocket full of cash. The big question is, how did they actually do? Well, let's jump straight into the Q2 performance scorecard and look at the headline numbers.
First up, revenue. They pulled in 228 crores. And get this, that's a 13% jump from just the last quarter. We're not talking year over year, we're talking quarter over quarter. That's some serious momentum right there.
And it's not just top-line growth, their profitability is looking fantastic. An EBITDA margin of 41% is just super healthy. To see profits jump 24% in a single quarter, that's like their business suddenly found a whole new gear.
Okay, now this is the number to pay attention to. Their margin trading facility book has ballooned over 1,000 crores, a 41% surge in 1 year. This isn't just some side business. This is the engine they are betting their future on.
So where exactly is all this great performance coming from? Let's take a closer look and really deconstruct Anand Rathi's business model.
What's so interesting here is the story this chart tells. Broking at 51% is still the bedrock, right? It's their core. But look at that non-broking slice, sitting there at 30%. That chunk of the pie is where the real action is. It's their growth story in a nutshell.
And this really shows you their big strategic shift. They're moving away from the choppy waters of transaction-based income and steering towards the calm, steady currents of fee-based revenue. It's all about building a more predictable, resilient business. Now, we've mentioned MTF a few times, so let's quickly break it down. Just think of it like a loan that gives investors more firepower. The client puts down some money, the brokerage lends them the rest to invest, and in return, the company earns a nice, steady stream of interest. Simple as that.
And this chart right here shows you just how important this has become. That 41% jump is just explosive. I mean, look at that growth. In just 1 year, their MTF book has gone from being a significant part of the business to being an absolute pillar.
But wait, there's more. They're not stopping there. They just got an insurance broking license. And the strategy is pretty straightforward. Start offering insurance to their existing clients. It's another perfect puzzle piece for that stable, non-broking side of the business.
So here's the thing. A business model like this, built on long-term relationships and products, it all comes down to one thing: your customer. So let's take a closer look and paint a portrait of the typical Anand Rathi client. This data is actually fascinating. Look at these numbers. Their clients aren't the get-in, get-out type. A huge chunk of them have been around for over 3, even 5 years. They're mature, they're incredibly loyal, and they're mostly coming from outside the big metro areas. And all that loyalty, it adds up. It translates directly into this number: an average revenue per client of over 10,000 rupees for the quarter. That is a seriously impressive figure, and it's proof that their strategy of building deep relationships is really paying off.
Okay, so this all leads us to the grand finale, their master plan. We've seen the numbers, we've met the customer, now let's look at where they're trying to take this whole thing.
And here it is, straight from the top. The goal couldn't be clearer. They're aiming for perfect balance. By 2027, they want their revenue split right down the middle, 50% from their traditional broking and 50% from these new, stable growth engines. And they're not just wishing for it, they've got a roadmap.
As you can see, they have some pretty aggressive targets just for this financial year, adding hundreds of crores to their MTF book and bulking up their distribution assets. These are the steps they're taking right now to make that 50-50 vision a reality.
So, what does this all boil down to? Their strategy isn't about getting the most customers. It's about going deeper, not wider. They want to become the go-to financial partner for the clients they already have, capturing a bigger and bigger slice of their investment pie. Which leaves us with the one big question. By making this deliberate pivot away from the chaos of transactions and towards stable, long-term relationships, is Anand Rathi actually building a more resilient, predictable, and ultimately stronger business for the future? The plan is clear, the execution is underway, and you can bet we'll be watching to see how it all unfolds.